This is Nightly Business Report with Sue Herrera and Bill Griffith.
Record run. The NASDAQ climbs to levels never seen before. The S&P 500 breaks briefly above 2,900 for the first time ever. And that has investors wondering, now what? Shopping spree. Confidence is up, spending is strong, and that could bode well for the retail sector in the months ahead. Hitting a wall. Home prices are rising by less and less, and buyers are paying attention. Those stories and more tonight on Nightly Business Report for Tuesday, August 28th. Good evening, everyone, and welcome. Bill Griffith is off tonight. Stocks edged just slightly higher, but it was enough to add to their records. The NASDAQ closed at an all-time high for the third straight session. The S&P 500 fluctuated throughout the day, briefly breaking through 2,900 before pulling back. Here are the closing numbers for you. The Dow Jones Industrial Average added 14 points to 26,064. The NASDAQ was up 12, and the S&P 500 gained a fraction. And with stocks at these lofty levels, what comes next? Well, Mike Santoli takes a look.
Summer is ending, corporate earnings season is petering out, and the broad stock indexes have pushed to a new record high after 7 months of struggle and recovery. In other words, Wall Street has reached a now what moment as trade talks come to a head and a consequential election season dawns. Based on the historical record, the setup for stocks tilts toward the upside. In decades past, when the S&P 500 has nosed to its first new high in at least 6 months, as it did in recent days, the index was higher 1 year later, more than 90% of the time. The S&P 500 is now up about 8% year to date, and when it's gained between 5 and 10% by this point in years past, the remainder of the year has tended to carry a bit higher still on average. One big question, though, is whether this market is hinting that it has used up much of the good news that the economy and the corporate sector are generating. Big company earnings are up more than 20% this year, yet the broad market has appreciated only half as much. This despite the fact that bond yields have remained unexpectedly low and companies have been sharing cash through dividends and stock buybacks in record amounts. And when unemployment and consumer confidence reach the kind of strong levels seen now, markets have begun to position for the eventual end of an economic cycle. This is why the outlook for 2019 will become so important as the summer gives way to fall. For now, profit forecasts for next year are holding up unusually well, indicating further expected growth of close to 10%. Historically, the month of September tends to be a choppy and unrewarding one for stocks, and midterm election years have been known to exacerbate those jitters, but these are broad tendencies rather than a reliable seasonal script. In some ways, it could be a positive that there's so much talk of the end of this cycle right now. It says that investors and commentators have healthy skepticism and muted expectations, even as there are few clear signs of an imminent downturn or an end to this era of corporate prosperity. For Nightly Business Report, I'm Mike Santoli.
The Canadian foreign minister arrived in Washington to start trade discussions with the U.S. 1 day after the White House announced significant progress with Mexico. The Canadian Prime Minister, Justin Trudeau, said he's encouraged by progress being made, particularly when it comes to issues surrounding the automotive sector.
Our team is right now in Washington digging into the progress made and looking at what the next steps are. We will engage in a positive and constructive way, as we always have been, and look forward to ultimately signing a deal as long as it is good for Canada and good for middle-class Canadians.
Treasury Secretary Steve Mnuchin echoed that sentiment, saying he's confident that a deal can be reached.
I don't anticipate there's going to be a lot of sticking points. I think that Ambassador Lighthizer has done a terrific job over the last year, working on lots of details. We've made a lot of progress with Canada, coming along on a lot of those, and hopefully they'll come on board. But if not, we'll move forward with Mexico. This is a great move forward for trade.
The trilateral trade pact known as NAFTA was ratified back in 1994. Thousands of miles away, a pipeline company finds itself facing millions of dollars in extra costs as it finds itself stuck in the middle of a trade fight. Leslie Picker has the story from Grand Falls, Texas.
This is Plains All-American's pipe yard in Grand Falls, Texas. The 76-foot-long steel pipes are stored here before they're welded together and placed underground. It's the makings of a pipeline that will transport crude from the oil-rich Permian Basin to Corpus Christi, where it will be refined. But take a closer look and you'll see a stamp that says Made in Greece. The pipes you see here were ordered from a Greek steel mill in December. By the time these pipes reached U.S. shores a few weeks ago, Plains was already on the hook for the 25% steel tariff. That added an extra $40 million in expenses for this project. Plains All-American, a $20 billion pipeline operator, filed for an exemption from the tariffs. It's one of tens of thousands of applications that American companies have submitted seeking relief. The company said it should not have to pay tariffs on steel that was purchased before the tariffs went into effect. Plains also said the steel they needed was specialized and could not be manufactured domestically. Plains heard last month that its exemption request was denied.
Certainly the exemption process can be a lot more transparent, and it's that arbitrariness to the exemption process that we see as the biggest failing right now.
The Commerce Department told CNBC that its policy does not allow for grandfathering of pre-existing contracts. Additionally, the administration said that Plains' exclusion requests received 5 objections from domestic steel manufacturers, which said they had the ability to make the steel that Plains needed. Critics of the tariffs and the process of exemption itself say the penalties could create unintended consequences that risk undermining current and future oil and gas projects.
Economic growth can be fueled by infrastructure, and that in order to have that infrastructure, we need steel. So without some change to the tariff policy, we're going to have what amounts to a 25% tax on American energy infrastructure. That can derail the advances that we've made with the American energy revolution.
For now, Plains will continue constructing its $1.1 billion pipeline using Greek steel and about $40 million less on the balance sheet. For Nightly Business Report, I'm Leslie Picker, Grand Falls, Texas.
Consumer confidence is near an 18-year high. According to the Conference Board, American households are optimistic about their job prospects, and rising incomes are making them feel better about the economy. In theory, when consumers feel better, they spend more, and that spending accounts for about 2/3 of economic activity. So usually when the economy improves, people do indeed spend more money on things that are not necessarily essential. Today, we got a peek into that so-called discretionary spending when Tiffany released its earnings. The upscale jeweler topped quarterly profit and revenue estimates, and it raised its full-year profit forecast. The company cited strong demand in both the U.S. and China. It also said it was able to attract both affluent and price-conscious shoppers. Spending at Best Buy may also be considered discretionary, since you may not need that TV right now, but you really want one. The retailer reported better than expected earnings and revenue, but its outlook was not as strong as Wall Street had hoped, and that sent the stock lower in trading today. Courtney Reagan has more on the state of business at Best Buy.
Best Buy put up a solid quarter with comparable sales increasing for the 6th straight time. Appliances and entertainment sales particularly strong. But it wasn't a perfect quarter. The retailer's online sales growth is slowing. This quarter's 10% increase marks the lowest growth rate in more than 3 years. Still, Best Buy says it's gaining share online in consumer electronics, even as the category and Best Buy's ordering, pickup, and shipping options mature. Best Buy has doubled its online sales in 5 years, now making up 15% of total sales. The consumer electronics seller also giving a weaker than expected profit forecast as it continues to invest in its supply chain and delivery speed. But many analysts are focusing on how far the retailer has come and the potential it has ahead.
Best Buy's growing online, they're growing in-store, their product availability is really good, they're benefiting from a very healthy consumer environment, some strong interest in the product set that they sell.
A few years ago, the world thought Best Buy was going to get Amazoned. Best Buy has been a very positive story for us for the last 4 or 5 years at least. It's an example of what can happen to brick and mortar when they unlock those stores and really double down on the customer experience.
Serving the customer and making it easier to connect technology to consumers' lives is a key part of Best Buy's strategy going forward. Best Buy continues to grow its free in-home advisor program and expand its total tech support membership. The retailer also just purchased Great Call. It's a company that makes devices for aging consumers that allows family members to connect with caregivers and access medical information. Experts expect that total consumer electronic sales will remain steady, so innovating beyond just selling gadgets is key for Best Buy's growth. For Nightly Business Report, I'm Courtney Reagan.
And it was a blowout quarter for DSW. The company reported record earnings and revenue and raised its full-year guidance. The discount shoe retailer said its results were helped by the launch of its reward program that drove traffic to both its stores and its website. The stock soared 20%, its biggest one-day gain ever. So, with consumer confidence up and discretionary spending solid, what is ahead for the retail sector? Oliver Chen is the senior retail analyst at Cowen & Company, and he joins us now to talk about that. Good to see you again, Oliver. Welcome back.
Thanks for having me, Sue. Good evening.
You make the point that this is the best consumer environment you've probably ever seen, right?
Yeah, we are very excited about what we're seeing. What's happening is low unemployment, wage growth, a high degree of consumer confidence. The customer is back, and it's showing up in numbers at Walmart and Target. The top line is very strong. That being said, this is a very changed consumer environment, given the threat of Amazon, given the rise of digital and mobile, and given the rise of social media. So it's a different kind of consumer, but underpinning this is an exceptionally strong consumer, low employment, rising wages. That's a nice place to be.
Yeah, it certainly is. What I was struck by was the fact that high-end luxury did well, for example, Tiffany, but also the discounters did pretty well too.
Yeah, we continue to have that thesis. We call it the bow tie thesis. We like what's happening at the high end. We also like stocks which play in value, such as Costco and the off-pricers. So the Tiffany's, the LVMH, the Sotheby's, those are great stocks that we're recommending. Also the low end as customers look for great value. So we have a strong high-end consumer, and we have a consumer looking for exceptional pricing, exceptional promotions, and that's a bifurcation that's happening with our stock selection as well as the economy.
I want to ask you about back to school season, but we just showed Tiffany's stock.
Yeah.
You have an outperform on Tiffany's. It is kind of expensive when you look at the metrics for the stock. Why do you still like it?
We are excited about what Tiffany is doing. We think the blue box being an icon, they're renovating their stores, they're innovating product, they're also implementing digital changes as well as marketing and really marketing and creating products for a new generation of customers, millennials and Generation Z. So we've seen really tremendous product innovation from Tiffany Tea. There's a new Tiffany True collection coming out in paper flowers. We've also seen increased use of social media, the Tiffany Cafe with experiential retail, and they're renovating their flagship. So a lot's working here, and we think the momentum will continue. And it's a global iconic brand, which will show lots of sustainable growth, given the nature of the brand, given the gifting potential, and given the strength of the high-end consumer as well.
What are you expecting for the holiday season coming up, and also back to school quickly? I want to note that you like Kohl's and you also like Walmart.
Yeah, we're excited about Kohl's because they have a nice active assortment. What's happening in the consumer is really a focus on health and wellness, the casualization of America, and thinking about clothes that outfits that lifestyle. Kohl's is doing very well there. They also have an industry-leading loyalty program. We think loyalty programs and using data is the future of retail, and they're shrinking their stores such that they're contributing floor space to other people. That's a nice story for Kohl's in terms of what we see for the back half.
Oliver, nice to talk to you as always. Thanks so much for joining us.
Thank you for having me.
Oliver Chen with Cowen & Company. It is time to take a look at some of today's upgrades and downgrades. Applied Materials was cut to neutral from buy at Bank of America Merrill Lynch. The analyst cites concerns over chip-making equipment growth. The price target is $49. The stock fell a fraction to $43.40. Fellow chip maker Xilinx was upgraded to outperform from neutral at R.W. Baird. The analyst there cites recent contract wins for the company. The price target is $90. The stock rose more than 2% to $76.99. Estee Lauder was upgraded to overweight from equal weight at Morgan Stanley. The analyst cites the company's long-term growth potential. The price target is $160. The stock was up more than 1% to $140.09. Coming up, sunshine, beaches, and Amazon.
I'm Scott Cohn at another potential site for Amazon's coveted $5 billion second headquarters. This is Miami, a city that has a lot going for it and a particular connection to Amazon's founder. We'll tell you what that is coming up on Nightly Business Report.
the rise in home prices is slowing. Today, we got another weaker read on the real estate market, and while that may be bad news for home sellers, it is potentially good news for home buyers. Diana Olick has more.
Home prices are still rising, but by less and less. In June, prices nationally rose 6.2% year over year, according to the much-watched S&P Case-Shiller Price Index. That is down from the 6.4% gain in May. Prices usually lag sales, and sales have been falling for most of this year. The problem has been a chronic lack of supply. Builders are not keeping up with demand, especially on the low end of the housing market. Demand is so strong that for a while, prices had nowhere to go but up until now. Affordability is becoming a much bigger issue, especially as rising mortgage rates are also taking their toll. The rate on the popular 30-year fixed mortgage rose from around 4% at the start of this year to just over 4.5% now. That directly affects housing affordability.
Home value appreciation has slowed, but it's still triple its historic pace, 3 times the rate of wage growth. It's still a seller's market. It's going to continue being a seller's market unless there's some dramatic shifts in inventory or a rapid increase in mortgage rates.
Home price gains are still quite strong in the West, where supplies are leanest. Las Vegas, Seattle, and San Francisco continue to lead the pack in price gains. The Midwest and Northeast are seeing smaller home price increases, as values there weren't quite as hot to begin with, and more supply is coming on the market. Washington, D.C., Chicago, and New York City showed the 3 slowest annual price gains among the nation's 20 largest cities. Prices are highly unlikely to start falling in most markets. Demand and the economy are just too strong. The gains, however, will likely shrink until more affordable supply comes onto the market. For Nightly Business Report, I'm Diana Olick in Washington.
Yum China reportedly rejects a buyout offer, and that's where we begin tonight's market focus. The Wall Street Journal says the restaurant operator turned down a proposal from a group of investors that valued the company at more than $17 billion. The investor group was led by Hill House Capital and also included the private equity firm KKR. Yum China shares rose nearly 4% to $37.17. In its first earnings report since returning to the public markets, discounted warehouse chain BJ's Wholesale saw same-store sales and earnings grow at a stronger than expected pace. The company said results were helped by an increase in membership fees, and it raised its full-year outlook. The shares, though, fell a fraction to $26.88. Hanes Celestials topped profit expectations, but it missed sales estimates and warned that the current quarter isn't shaping up to be a success. The company said intensifying competition would cause revenue to decline slightly. Shares fell more than 6% to $26.77. And Campbell's Soup is reportedly not interested in selling itself. The New York Post says the soup maker plans to announce the results of a months-long strategic review soon. If Campbell chooses not to find a buyer, a proxy fight could ensue with activist investor Dan Loeb, who has been urging the company to sell itself to improve financial performance. The shares finished down 2% to $39.83. Well, 20 cities have made their best pitches to be the home of Amazon's $5 billion second headquarters, but only one of those finalists can boast a particular personal connection with the company's chief, Jeff Bezos. Could it be enough to seal the deal? Scott Cohn's tour of the contenders takes him to Miami tonight.
Miami's got style, and it's got symmetry. A headquarters here would let Amazon have homes on opposite sides of the country. It also has Palmetto High School, whose 1982 valedictorian was none other than the future founder of Amazon, Jeff Bezos. Local boosters say that can't hurt.
And at least he has some knowledge of what Miami is all about. We look forward to refreshing that by showing what the new Miami is.
Today's Miami is a transportation hub, a key priority for Amazon. The region has an extensive rail network, 3 international airports, a gateway to Latin America, where Amazon is trying to expand. Among the possible sites, the mixed-use Miami World Center project, already under construction.
We're becoming actually a technology center here, and we're transforming Miami. Great art, great culture, and a great place to live, great weather, and also obviously a really beautiful, beautiful place.
Florida has low taxes, relatively business-friendly regulations. The economy is strong, but the state also has some weaknesses that could put a crimp in Miami's style. Amazon says it wants a location that can attract and retain top tech talent, but high school test scores in Florida are among the worst in the nation, and the state has the lowest concentration of tech workers among the 20 finalists. Not to worry, local boosters say.
It's more than just what's here right now. It's what the future holds for Miami and how fast we can build a talent pipeline that would meet Amazon's requirements.
That could depend on Florida's notoriously fickle politics, even though Amazon says it wants a stable environment. But Miami says it can deliver and convince Jeff Bezos that you can go home again. For Nightly Business Report, Scott Cohn, Miami.
Coming up, the companies in line for a potential political ad windfall. President Trump has called Google's search platform rigged and accused it of suppressing positive views about his presidency and conservative views.
They better be careful because you can't do that to people. You can't do it. We have literally thousands and thousands of complaints coming in, and you just can't do that. So I think that Google and Twitter and Facebook, they're really treading on very, very troubled territory, and they have to be careful. It's not fair to large portions of the population.
White House economic advisor Larry Kudlow said the Trump administration is, quote, taking a look at imposing regulations on Google. In response, Google said that when users type queries into the Google search bar, our goal is to make sure they receive the most relevant answers in a matter of seconds. Search is not used to set a political agenda, and we don't bias our results towards any political ideology. That's a quote. Google's shares fell a fraction in trading today. In an unprecedented move, Facebook is removing several accounts of Myanmar's military officials to prevent the spread of what it calls hate and misinformation after reviewing the content. This is the first time Facebook has banned a country's military or political leaders, and according to the company, the bans cannot be appealed. Meantime, Twitter has suspended about 500 more accounts for violating company policy for what it calls coordinated manipulation. The company suspended 280 accounts last week, most of which were from Iraq. Twitter did not give a country of origin for the latest suspensions. Both Facebook and Twitter's actions follow a summit of tech companies last week, where discussions centered on ways to protect their platforms during the upcoming midterm elections. And ahead of those midterm elections, political ad spending is ramping up. Billions of dollars are expected to be shelled out across local TV, cable channels, and digital platforms. Julia Borston is following the money for us tonight.
The midterm elections are just over 2 months away.
We've got to bring new ideas, fresh thinking, and we've got to change the direction of this country.
I flew 89 combat missions as a U.S. Marine, and my 90th mission is running for Congress.
That means billions of dollars will be shelled out for ads across television and digital platforms to help those fighting for gubernatorial, House, and Senate seats. Analyst Daniel Kurnos says the local TV broadcasters and their parent companies stand to benefit the most from this year's increased ad spending during the midterms.
Nexstar looks like they're going to have outsized results relative to expectations. I think Gray will do particularly well. Nexstar and Sinclair probably have the two best political footprints, followed closely by Gray in terms of markets where there are toss-up races.
Toss-up races make investing in ads all the more important, which is why total political ad spending is expected to reach nearly $4 billion this year. That's about $1 billion more than during the 2014 midterms, according to Kantar Media. Spending on local TV ads is expected to grow 14% to $2.4 billion, while political spending on cable channels is expected to grow 42% to $850 million. But the biggest jump in political ad spend is on digital platforms, expected to be up by 140% this year to some $600 million. As digital platforms and election manipulation remain in focus more than ever, Facebook is launching a new archive of all political ads purchased and who paid for them. But even with the surge in digital advertising, Curnow says he does not expect that growth to cannibalize TV spending, which remains king.
The vast majority of political spend is still being spent on traditional media and local television in particular. It's been proven to be the most effective medium. I think it will continue to be.
The question remains whether Facebook and Twitter's challenges with foreign interference and fake news will drive advertisers to spend on digital platforms with professionally generated content, such as Hulu or news sites. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And finally tonight, FAO Schwartz is reportedly making a return. According to the Wall Street Journal, the iconic New York store that shut its Fifth Avenue doors in 2015 plans to reopen in Rockefeller Center this November. A California firm acquired that brand in 2016 and says the new location will make the store as much about the experience as it is about the shopping. Just in time for the holidays. Before we go, let's take a look at the final day's numbers on Wall Street. The Dow added 14 points. The Nasdaq was up 12 to a record, and the S&P 500 gained a fraction, which was also a record. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, and we will see you right back here tomorrow.